Futures taking a bit of a downturn this morning. What's your WEX word of the day? How do you see today shaping up?
My WEX word of the day in light of the 4th of July holiday is fireworks, and that's for 3 reasons. So the stock market saw fireworks in the first half of the year with S&P up 14.5%, NASDAQ up 18%. Last week's presidential debate had several explosive exchanges, and Friday's inflation read showing that inflation during the month of May was the lowest we've seen in more than 3 years, caused a boost to investors to really set the stage for a September rate cut. So today in particular, hearing from Jerome Powell in Portugal will be very important. It's the first speech we've heard since Friday's data point. I think, Frank, that we could be in store for the grand finale before the end of the year.
Okay, so you think we're in store for a grand finale. I want to talk more near term. We had Craig Johnson from Piper Sandler earlier on the show. He's calling for a 10% correction. He's looking for a pullback. He thinks some of the narrowness in the market is one big factor. Do you agree or disagree on the correction and some concerns about the narrowness?
I agree short term on the correction. I think the market is extended and technology in particular is overbought. So there's a lot of commentary right now that July and August are excellent months from a seasonality standpoint in the stock market, particularly in an election year. Unfortunately, when market view is consensus and volatility is very low, historically the opposite happens. So I suspect any correction will have limited downside and should be used as a buying opportunity. S&P corrects 5% 3 times a year and 10% every 16 months. The last time we saw a 5% pullback in April. So I think a short-term pullback would be very healthy for the market, but I do believe that equity markets move higher by year end.
All right, so you think a pullback would be healthy. I want to talk to you about another pullback in the chip space and also including NVIDIA. NVIDIA actually down again today. We were talking about regulation in NVIDIA earlier, but just in general, we've seen chips pull back a bit. Speaking to a number of portfolio managers and traders, they believe as part of this pullback, we're going to see some money go into some other cyclical sectors. A lot of people think financials may be a beneficiary. When you're advising your clients right now, where are you telling them to put money to work?
I think that mega cap tech and semis will continue to be the leader in the market. So I think a pullback like this is a buying opportunity for long-term investors. I think financials and energy will do well if Trump is elected. So again, you have to look at the company specifically and the merits of that individual company as opposed to looking at a sector overall.
All right, I want to get to your pick. It's Royal Caribbean. Stocks having a great run up since earnings back in April, big jump. They actually signaled they're having very strong demand, but long term, as we look at this stock, are you concerned about it? ISM yesterday, obviously very different than cruises and recreational travel, but one of the factors that led to contraction in ISM was weaker consumer demand. This is some of the most discretionary of all spending, getting on a cruise. Are you worried about their business long term?
No, I think that the U.S. consumer is not necessarily strapped for cash. I think the U.S. consumer is becoming more frugal, and inflation has been around for far too long, and consumers are becoming more discerning with their dollar. They want to see their dollar stretched further. So Royal Caribbean, we believe, is best of class within the cruise line space. They have a differentiated product and destination offering. And what's crazy, Frank, is that for $185 a night, you can set sail on a Royal Caribbean cruise in an interior room. You compare that to the cost of hotel, all the foods included. And what we heard last week from Carnival Cruise Lines was that 60% of the U.S. population is within a 6-hour drive to one of the many ports of call. So from a consumer standpoint, you remove the airline expense. That's a big deal. So I think Royal Caribbean will continue to do well.
Very quickly, we got to get going, Lizzie, but does the idea that we're going to get rate cuts coming in September, does that play a part in your thesis that, you know, hypothetically, that we'll see some easing on expenses for consumers?
I think that the rate cuts is going to be the primary driver for the market. So I think the consumer is more discerning, but the consumer is still healthy, the high-end consumer, that is.
All right.